Good morning and welcome to Stock Market Today for Tuesday, June 2nd, 2020. This is your host, Dan Russo, the Chief Market Strategist at Shaken Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Shaken Analytics. Head over to shakenanalytics.com/today where you can sign up for a free email where I get a lot of the great content for this show, as well as give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. So U.S. equities were higher in Monday's trading, finishing near the best levels of the day. Healthcare was the only sector to finish lower on the day. Treasuries were slightly weaker with the curve steepening. The dollar was weaker on the major crosses, which extends some declines over the past 2 weeks. Gold finished down about 10 basis points, and WTI crude was down a similar amount, 10 basis points. Your outperforming sectors on the day, REITs, energy, and financials. Your underperformers, healthcare, down by about 1%. After that, tech and industrials, though both were higher on the day. As we get to the desk this morning, futures are up 60 basis points in Tuesday morning trading. Asian markets were higher overnight with Japan, Hong Kong, and South Korea all up over 1%. European markets are higher as well. Treasuries are weaker across the curve. The dollar is stronger against the yen, but once again weaker against the euro and sterling. Gold is weaker, and WTI crude is up 2.5% to get us going on a Tuesday morning. And as we look at the structure of the S&P 500, you can see that we remain above that key 3,000 breakout level, as well as the 200-day moving average, which is now at 3002. So we are grinding higher, and that's much to the dismay of the doubters. In the near term, initial support in the 2850 to 2950 range. It's kind of this gap here, and then another gap here, both gaps higher on the opening. So you can call that kind of a 100-point zone of support. Should that give way, you can start to think about 2750 down here just below the now rising 50-day moving average. Now, resistance does remain at that 3110 level that we have been highlighting, and we continue to believe that a break of that 3110 level would then target the February highs. We are overbought in the near term, and shaken money flow is flat to bullish in the near term. Flat over the past, kind of couple of weeks of trading. Bullish in the near term with a recent turn higher. So that's the structure of the broader market. As always, we think it makes sense to drill down under the surface, see what's going down across sectors, themes, factors, to try to identify what are the strongest areas of the market, regardless of what the main market trend might be. So what are we talking about in the note today? Our market in a minute. Stocks drift higher in a quiet Monday session. Cyclical sectors continue to improve while technology remains strong. It's Tuesday, so we'll be doing our sector rotation work today. Bond proxies, your REITs and utilities, are showing early signs of improvement. Gold miners pulled back but held the breakout level. And as I said, futures do point to a higher open here today. So if we take a look at the major indices now from a power bar perspective, the Dow tacked on 33 basis points yesterday, but remains skewed in favor of the bears on the power bar. 3 bulls to 10 bears there. S&P 500 still bearish, but improving. Up 37 basis points, 92 to 118 bulls to bears. The NASDAQ inline performer, 33 to 12 bulls to bears there. That ratio remains strong, as does the ratio for small caps, which outperformed yesterday, tacking on 90 basis points. 516, the bulls to 281 bears there. Bonds down ticked. Real estate had a good day yesterday, up nearly 2%. But I do note that the power bar ratio there does remain bearish, 2 bulls to 10 bears. So according to the Shaken Power Bar, small cap stocks somewhat more bullish than large cap stocks. The major indices across the board, some like to say indexes, I say indices. Regardless, those are mixed. So let's hit our stock of the day now. In my note today, I talk about that pullback in the gold miners and start to look to see if there's any opportunities at the individual stock level. And I think I see one here in Agnico Eagle. AEM, the ticker symbol, has a bullish Shaken power gauge rating for a stock that's in a strong trend above that rising long-term trend line and a strong industry group, right? We can see, similar to what you'll see in a chart of the GDX, breakout, pullback that holds support, and now beginning to work higher. That is playing out as the stock has been an outperformer since late April, overbought, oversold indicator in an oversold position, but beginning to move higher. And that's what the optimal situation here is on our checklist. Chaikin money flow bullish. So if we look at the checklist, all 6 boxes are checked. The kind of the what you want to own, right? Bullish stock outperforming in a strong industry, when you want to own it, when it's oversold above that rising long-term trend line with strong money flow. If you take a weight of the evidence approach, we can see here that all 6 of these boxes are checked. Again, does that mean the stock is guaranteed to work? Absolutely not. There's nothing guaranteed in the market. But if I'm looking for opportunities in leading areas of the market, these are some of the kind of characteristics that we're looking for. As always, manage risk for your level of risk appetite as well as time frame. But Agnico Eagle, AEM, looks like a compelling name as a bullish idea. Taking a look at the sector tracker now, over the last 5 days of trading, kind of an interesting dynamic at the top of the list, because you have REITs and utilities, which have rebounded here in the near term on an absolute and relative basis. And we'll look at utilities a little bit later on. But you also have financials at the top of the list, right? So you have the rate sensitive areas, right? Generally speaking, lower rates benefits REITs and utilities to the detriment of financials. Now, all 3 are kind of leading, and that's an interesting dynamic. We'll see how that plays out. I don't think that correlation is something that's likely to be sustained. After that, industrials and materials kind of point to that cyclical rotation that we've been talking about for the week, about a week and a half or so. Staples, discretionary, energy, middle of the road. And then you're kind of what had been your big leaders, healthcare, comms, and tech, lagging over the past 5 days. However, all groups are higher over the past 5 days of trading, and that's an encouraging sign for equity bulls. Taking a look at the industry in focus now, as part of the financials, it's capital market services, which has been a laggard over the past 6 months, underperforming the S&P 500 by 4.36%. However, its power bar ratio, which looks at future potential, is very strong, right? 18 bulls to 3 bears. It's currently ranked number 3 of 21 subsectors and has moved up 6 slots over the past week. So some names there that might make sense to dig in and do a little more work. Donnelley Financial, DFIN, very bullish. International FC Stone, INTL, also very bullish. And BrightSphere, BSIG, with a very bullish Chaikin power gauge rating. And if we take a look at the ETF, right, the caveat here will be it's not a very liquid ETF, but it does serve as a proxy for the group. And what I see are some interesting dynamics at play. First, the power gauge rating, the ETF rating for KCE is bullish, right? There's the ratio we spoke about, 18 to 3 bulls to bears, and we are in a strong trend as the fund has broken above the long-term trend line, which is beginning to turn higher. That's the kind of copper or orange line here. You can see that it's coincided with a breakthrough resistance at the $52 level. Now, in the near term, we're overbought. I don't love the fact that money flow is bearish. However, take a look at the potential personality change here. Rating turns bullish, and the fund begins to outperform, right? So if we think about the potential for change here in what had formerly been a lagging part of the market, I think it kind of makes sense to take a look within the group, try to identify some of the names that have good potential, right? Just run out and buy everything in the group. But with the fund overbought, I think it makes sense to do some work, dig in, take a look at what some of the interesting names are. And if you see anything that looks compelling, but is not quite set up yet, you can add it to a bullish watch list. Taking a look at what's trending now, yesterday's S&P 500 gainers and losers are movers and shakers. The soft lines had a good day yesterday. And Capri was up 11.7%, and that's ahead of their earnings report tomorrow. Gap, GPS, similar dynamic at play, strengthening the soft lines. I'll note that they are scheduled to report earnings on Thursday. Norwegian Cruise Lines adds 10% as kind of the economic reopening trade. One of the key names there. Remains bearish here at Chaikin Analytics, but up 10.4%. Nothing company specific to drive trading there. APA up 8.7%, and Noble up 8.25%. Both of those stocks are part of the energy patch. Didn't see any company specific drivers, behind the movement in those names yesterday. On the loser side of the board, Pfizer down a little over 7% as they stated that their breast cancer drug will miss its primary endpoint. So investors took some out of that stock. Norton LifeLock, that was a strong name on Friday, gave some back yesterday. Didn't see anything company specific there, down 4.7%. NetApp down 4.2% as hardware was under pressure yesterday and lagged within the tech space. JBHT, didn't say anything company specific. There were actually some positive research comments, but the stock was down 3.43%. And Gilead, some disappointing news around their drug for COVID-19. Gilead remains bullish here at Chaikin Analytics, but they took 3.43% out of the stock yesterday on that COVID-19 drug news. So let's take a look at what's happening now. Some of the interesting dynamics that I'm seeing at the sector level. XLU, the utilities, perking up a bit here, right? Now testing resistance, price-based resistance here at around the 60.5 level. 200-day moving average is flat at 61.47, but you've had a little bit of a rally here in the near term, even as the market has drifted higher, right? And the RSI for XLU, after making a series of higher lows, is attempting to shift into bullish ranges. But what's interesting to me is this near-term break of the downtrend on a relative basis, right? We all know that utilities are rate sensitive and they tend to be defensive in nature, right? So with major markets overbought based on our indicators, more details in my notes over the past few days. And this is something I'm paying attention to because if the major markets are overbought and pushing up or near or trading around key levels, and we start to get a rotation into something like utilities, which are defensive, it doesn't guarantee, but could point to some stalling out in some of the equity market strength of late. So this is early days, but I am watching it closely, similar to how I've been watching the kind of the cyclical rotation, right? Paying attention to see if these trends gain any kind of traction. Interestingly as well, I'll be watching this XLU trend in conjunction with banks to see what that could potentially say about interest rates. So that's a few of the kind of intermarket themes and relationships that are on my radar screen here this week. Now, technology at the same time is holding leadership. So I wonder if we get something similar to what we saw throughout a lot of 2019, where you had growth outperforming as well as the defensive areas. I don't know. Certainly plausible given everything that's going on from an economic perspective. But we'll take a look and continue to monitor those trends as tech now trying to close that gap similar to the one that the Qs just closed, while its RSI begins to shift into bullish ranges and tech maintains a nice leadership uptrend relative to the S&P 500, right? A little near-term pressure during that rotation, but looking to reassert here again. So, definitely a potential theme to keep an eye on is one that played out through much of 2019 with growth outperforming in a slowing growth world, while investors gravitate towards the defensive kind of bond proxy areas of the market. I'm not ruling it out. It's something I'm paying very close attention to. And then finally, the gold miners, GDX, the VanEck Vectors Gold Miners ETF, right? Breakout through the 31, 32 range, pull back to retest that breakout zone. CCI gets down to an oversold position, beginning to move higher, while the group holds relative support. That's interesting to me, hence AEM. That's going to wrap us up. Take us a test drive. Be safe, be well. I'll be back with you tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below. Leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.